right, today was a fantastic day for the bulls. White House indicating that the president's tariffs might be narrower than expected. That allowed the averages to roar. But the one thing we know about this administration is that trade policy can change on a dime. Lots of people are worried about the impact of these trade wars. Consumer confidence already started falling. We're seeing large layoffs in the government sector because of Elon Musk's Doge. While the labor market's been holding up very well, that's definitely something to worry about. And I know that retail sales, many people are worried about. Okay. Now, I never thought we were headed for a recession, but clearly this economy is in worse shape than it was, say, 6 weeks ago. Of course, the one thing we don't have in this environment is any sense of certainty. And when the fundamentals are uncertain, I like to fall back on the technicals. And that's why tonight we're going off the charts with the help of Bob Lang. He's the founder of ExplosiveOptions.net and the author of Know Your Options. Specifically, we're hunting for the kind of consumer-oriented stocks that can still work even in a slowdown. And for that, Lang argues you want companies with terrific subscription-based business models. You know I've liked these all along. I couldn't agree more. Once people get locked to a great service, they almost never cancel, whether it be Costco, Amazon Prime, Netflix. After viewing the charts, Lang has 3 subscription-based stocks that he likes. And he likes Netflix, he likes Roku, and he likes Spotify. Obviously, Netflix needs no introduction, right? They practically invented the streaming business, and no one else has ever been able to catch up to them. These guys also have a knack for pumping out great content that's popular all over the world. They use a lot of titles, and we've all learned to use titles. So what do we see in the Netflix chart? All right. First, Lang points out that this stock has had a lot of stuff here. An enormous gap up in January after the company reported a phenomenal quarter. Gap, okay? And that is a pretty amazing gap. Then, starting in mid-February, the stock rolled over along with everything else in the group to the point where it completely filled the gap. As Lang sees it, that reset the stock, and Netflix has been rebounding ever since. I like that. He reset it. That's the way to think about it. At this point, it's up more than 9% for the year. Better performance than most tech or tech-adjacent names. Right now, Netflix has the ceiling resistance at $1,000. Okay, there we go. Up less than 30 points from here, but it's been rebounding on strong volume of late, which is always a good sign. Remember, when it comes to the charts, volume is like a polygraph. A move on high volume is generally a move that's telling the truth. If Netflix can break out above $1,000, Lang thinks to go all the way up to $1,250, which we don't even have a space for. Now, looking at the MACD, moving average convergence divergence, this is one of the technicians' favorite lines. This is a powerful momentum indicator that can help catch changes in the stock's trajectory before, and that's the keyword, before they happen. So in other words, you can take action. In the case of Netflix, the MACD recently made a bullish crossover, and you see that right here. Okay, notice that's the, you can see, this is an odd thing, but you can see that I hope you can see it, that it crossed over right there. Where the black line crosses above the red line, and that's among the most reliable positive signs of the business. At the same time, the Chaikin money flow, CMA, which measures buying and selling pressure, is slightly bullish. Okay, that means the big boys, they're not backing away from this one at all. Now, take a look at this chart that highlights the relative strength index, or RSI. That's another momentum indicator. It's just a little clearer here. It started bouncing after hitting oversold territory earlier this month. All right, you can see these are things that you can see where, boom, oversold. Okay. Right now, it's still around 50, which is very good, which tells Lang that Netflix has a long way to go in this rally before it gets overbought. That's important because what you're going to see is this is where, well, whatever. Lang also likes the stock been flirting above the 50-day. That's what I like. Okay, that's my key one. In recent sessions, it's above that level, which is very, very positive. Put it all together, you'd be a buyer of Netflix right here, right now, and so would I. Everything I saw here is just picture perfect of what you want to buy. How about another subscription play? Lang's also a big fan of Roku. That's the streaming service that has the software directly installed in most new televisions in this country. They currently reach more than half of the households with broadband in America. 90 million people use the streaming platform, and they've been able to consistently grow their user base. Plus, lately, they've done a good job of getting their hands on quality content. Of course, when you look at Roku's daily chart, this thing's a roller coaster. It's really hard to make any sense of it. Lang says it's on the more speculative side. I would say it's completely speculative. But from its highs in February to its lows earlier this month, Roku plunged from just under $105 to $66 and change. However, the stock looks like it's put in a bottom about a week ago, right below the 200-day moving average. All right, that matters. Red is 200-day moving average. And it's rebounded all the way to the low 80s, and that's kind of an interesting level. The thing is, Roku just started to rebound. Lang points out that the Chaikin money flow down at the bottom is still pretty darn bearish. See, it's down below that. That's not good at all. Very ugly. The MACD line, though, is currently in the process of making a bullish crossover. Remember, now I like to see the bullish crossover. I don't like the making in the process, but let's go with what Bob says. He said you can expect the black line to cross above the red line very soon. And again, that's a very consistent indicator the stock's got more upside. In today's trading session, Roku crossed through a ceiling of resistance at the 50-day moving average. Now, Lang expects an upside breakout, with the stock only ripping back to the recent highs near 105. If the stock lingers in the current range between 75 and 80, this one might be a good one for you. Okay, it's a good sign. It might be a good one for call options too, if you're really a little bit more into it. Lang's not ready to give you an all clear here, but if Roku does trade sideways for a few weeks, you might want to get ready to pounce. Finally, there's Spotify, long my favorite, the music streaming service with an incredibly sticky business model. They now have more than 263 million global paid subscribers, up from 124 million 5 years ago. Again, nobody wants to get rid of their music service. It represents incredible value given the low monthly price. So how does the daily chart look? Lang notes that Spotify recently tested its 50-day moving average, then rebounded with decent volume. Then the stock's MACD line has already made that crossover that we like so much. See that right there? They're all about to do this. That's one of the most reliable signs of the business. Lang says Spotify is now building a base at a higher level. It started trading sideways, but in this view, that often means the next move will be in the same direction as the previous move, which means it's going higher. Spotify's shaking money flow. Not bad, right? Still positive. In fact, it's been positive since November. Even the big sell-off didn't scare the big money away from Spotify. With the stock's recent rebound, it broke a key downtrend line and rose above its ceiling of resistance on healthy volume. It's fine. Lang sees it, the big institutions are still buying this thing, and he wouldn't be surprised if this $600 stock makes a run at $700. Good story. I remember it was like in the 300s. That's amazing. Now, here's the bottom line. The charts as interpreted by Bob Lang suggest that Netflix and Spotify should work in this tricky environment, and Roku can trade sideways for a few weeks. He'd like that one, too. Now, if I were to do this, I would buy common stock Spotify, I would buy common stock Netflix, and I would buy calls on Roku. That way, I'd cut off my downside. Let's take questions. Let's go to Paul in Ohio. Paul.
Hey, booyah, Mr. Cramer.
Booyah, Chief. What's up?
Hey, thanks for all you and your staff do.
Thank you. Staff is great. Oh, fantastic. Thank you.
Proud club member, and I'll be able to retire early because of your help.
That's what I want to hear, and that's why we do this. That is the purpose of this.
Very good. Hey, I'm calling about a great American company founded in 1956 whose high-quality products and customer service has helped shape the American culinary landscape. What does the future hold for Williams-Sonoma?
Okay, I think the stock got ahead of itself before that quarter last week. I didn't mind the quarter nearly as much as other people did. I think that this is a digital-first company that's doing a lot of things right. I think that Laura Albert is doing a fantastic job, and I would be a buyer of this stock at 18 times earnings, which is really darn cheap. Let's go to Dane in Florida. Dane.
Hello, Mr. Cramer. This is Dane. How are you today?
I am good, Dane. How are you?
Hey, well, thank God it's Monday, Thanks for asking.
There you go. Hadn't thought of that. Go ahead.
Yes, sir. So I wanted to ask you about the self-driving partnership with GM and NVIDIA, especially down here in Florida. We could really use some self-driving cars down here, 'cause 90% of the people down here got their license in the discount aisle, so.
Yeah. Well, look, let's talk about it. GM sells at 4 times earnings. That's actually a red flag. If the president does get involved heavily with Mexico and Canada and auto parts, they have the most to lose. That said, they've got a big buyback. I think it's a push. I'm not going to recommend it right here until it pulls back a little. There's something very, very worrisome about that 4 times earnings situation. That means that those estimates are going to have to come down, which means that the tariffs are going to be against them. Let's wait and see. I need to go to Trey, our buddy Trey in Texas. Trey.
Jim, it seems like every time I venture into the market without consulting you first, something catastrophic happens.
What can you say?
For example, this past Friday, I had 50 truckloads of coffee beans delivered to my house after executing a futures trade I guess I didn't fully understand. Despite the fact that I'll personally never have to buy a cup again, I do remain bullish on coffee. and wanted to see if you think Starbucks will wake my portfolio up.
I like Starbucks right here at 95. I think it's just a total win. I think you buy some. Actually, you should be selling calls on it because all that coffee got traded. But I really, really like Starbucks. It's come down just enough to be able to time to start buying some Starbucks. If you don't any, the club already has some. And thank you for the call. All right, the charts as interpreted by Bob Lang suggest that companies with subscription models could work best in the environment. Stocks like Netflix, Spotify, and Roku, I couldn't agree with more. There's much more, man. Might I include my look at the headlines shaping this week's run-up in Boeing. Then do the Bulls or Bears have a better look than Magnificent Seven road ahead? I'm running through the group now that people are thinking they're going to bounce. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.